Hi everyone, and welcome to How to Start Investing, InnovateX's December monthly event. We are so excited to see everyone, and thank you all so much for joining us today.
We're going to start off the event with a few statistics we wanted to share and that reveal the current state of our personal finance education.
Studies have shown that only 30% of those younger than 35 invest in the stock market, and 18% of those between the ages of 18 to 25 are investing. And finally, only 87% of teens reported knowing little about personal finance. So we're going to start off with some introductions.
And for those of you who are new, you may ask, what is InnovateX? Well, InnovateX is a 501c3 nonprofit that aspires to increase accessibility to personal finance and entrepreneurial opportunities for students of all socioeconomic backgrounds. And we do advocacy work, host enrichment programs, workshops, and provide access to resources.
So starting off, I'll introduce myself. I'm Catherine Nan, a member of the InnovateX outreach team.
Hey, I'm Daniel, and I'm also a member of the outreach team at InnovateX. And a special thank you to our wonderful panelists, Ms. Mia Grodowski and Mr. Trent Medill, for speaking today. So Mia, go ahead and introduce yourself.
Sure. Thank you guys for the introduction. So hey, everyone. It's nice to meet you. I'm Mia, a junior at NYU, concentrating currently in fintech and entrepreneurship. I've always been fascinated by these two emergent fields of finance and tech as they've been expanding rapidly and innovating upon financial systems and markets. And it couldn't be a more exciting time to invest and learn about the markets as well. And so I've been an advocate in the financial literacy field to help bridge the gender gap for women in STEM and destigmatize it since high school. And as a senior in high school, I worked for LiquidNet, a dark pool trading firm, assisting with high frequency trading and OTC markets. And last summer, I worked as a client consultant at Visa. And on my own time, I'm a personal finance blogger, the COO at Atticus with my colleague Trent on the panel, and a campus ambassador for a little known newsletter. You might have heard of it, Morning Brew, and part of the foundation Forte.
Cool. Thanks, Mia. Yeah, it was an awesome introduction. I'll just kind of take it from there, share a little bit more about who I am. First off, excited to meet all of you. Super excited to be here to kind of share some insight about finance as well. So a little bit about me. I actually graduated from the University of Minnesota last December, so just about a year ago, with a Bachelor's of Science in Business, kind of focusing on finance and a minor in accounting. Prior to that, though, I had a bunch of entrepreneurial experience, kind of starting with Encephalo Investments, a little hedge fund that a couple students started up, helped them kind of get their footing kind of underneath them, go from there. Last summer, worked at JP Morgan as an analyst there, gained kind of exposure into investment banking, everything there. And then really after graduating, had an offer to go work for JP Morgan, kind of decided against it because I really wanted to kind of make an impact with what we could do with investing. And that's kind of where I started up Atticus, where Mia and I are kind of colleagues there. And a big personal mission of mine is really helping close all the gaps that exist in investing. I mean, some of those stats that you shared at the beginning there, Catherine, were, I mean, exactly why we started Atticus. And that's part of my personal mission there, is really kind of close those gaps that exist, whether it's socioeconomic, whatever it may be. And I think part of what this conference is exactly what we're trying to do as well. So super excited to be here and yeah, looking forward to it.
Okay, so Daniel's going to stop sharing screen for 1 sec just so we can take a quick picture before the Q&A session. So I saw that a few of you have already turned on your cameras, and if you don't mind, please just turn on your camera for like 10 seconds and we can just take like a screenshot of the Zoom and we can post the picture on our Instagram if you don't mind being featured. Yeah, thank you so much to everyone who's turning on their cameras right now. We'll give it a few more seconds so you can get yourself ready. Also, we'd like to thank the people who are in different time zones. Like on the Google form, I saw that somebody was from India, and I don't know what time it is in India, but I'm sure that it's very different from 3 p.m. 3 p.m. EST. So thank you so much for everyone who was able to make it through like lunch breaks, in the evening, in the morning. Okay, so right now I'll just take a Zoom screenshot. 3, 2, 1, smile. Okay, 3, 2, 1, smile. And then wait, let me first mark done. Okay, 3, 2, 1, smile. Okay, yeah, you can turn off your cameras now if you want, or you can keep it on. Either way is fine. And Daniel, you can continue sharing the screen. Okay, so now we're moving on to our Q&A session, which is the main part of this event. The first question we would like to ask the panelists is, how did you find out that investing was something you wanted to do? So either of you can start.
Yeah, I guess I'll take it. I guess my interest for investing and personal finance started at a relatively young age, around 16, I would say. And I don't want to start off on a sad note, but the hardest and most drastic time in my life not only taught me the most, but actually introduced me to the investment world. My father unexpectedly passed when I was 16. And that was a time that taught me and my mother a crucial lesson about investing, to not only continuously invest in ourselves, but never depend on anyone, especially the breadwinner, which tends to be the male of the household, and that your time is your most precious resource in life and in the markets. And I would say that experience at 16, not knowing anything, never hearing about Excel or portfolios or what an advisor was, really propelled me to double down on breaking the money taboo and also the gender gap, since money plays a crucial role in all of our lives, whether we like it or not, no matter who we are or how much we have, whether you study architecture or the arts, the best investment is in yourself. And I think that's where it really led from there. And for those ready to head off to college, or you may be in it already, I would say the number one thing I would advise you to do is to prioritize your financial health, because unfortunately we can't rely on the education system to do it for us.
Yeah, no, I think that's great, Mia. Just build off of some of those same points there. Similar to Mia, started at such a young age, probably around 16 as well. I think when I got my first job, I was like, okay, now I got money, I got paychecks coming in. What can I do with this? And fortunately for me, my dad is actually a financial advisor. So I kind of grew up in this space where I understood. And I took that for granted, because most people, that if your parent is not a financial advisor, chances are you probably don't know a whole lot about it. So luckily for me, my dad was. I've kind of, again, at age 16, wanted to know more about it. First, I mean, my first question was, how does the stock price go up and down? I don't get it. I don't get it. Why does it change? And that was my biggest question. I couldn't understand it for the longest time. And again, at age 16, that's a lot to process. So that, I mean, in talking with my dad, learning more about that kind of through the process, that's really what kind of opened my eyes to investing. And also learning how much you can potentially earn from investing as well. I mean, it sounds like, oh, hey, I mean, I think there's a lot of stigma like that you need a ton of money to start investing, when really, I mean, you can start with a couple dollars or whatever it may be. And I think that the fact of how money compounds over time, not to get too technical, I thought that was just super interesting to me. I'm like, wow, say $100 just each year, that can really start to add up. It's not just you're going to have a couple thousand at the end, you could have hundreds of thousands. So I'm like, wow, that's interesting. So yeah, I think that, and again, again, as Mia mentioned, some of the gender gaps and the socioeconomic, all those gaps that exist. I'm like, this is definitely something I'm interested in, helping make an impact, whatever it may be. And yeah.
Thank you for both of your answers. That's really, really cool. And for the next question, what platforms did you find useful to invest with, like apps, websites, etc.?
Absolutely. I can start here and then Mia, I'll let you kind of tag on after that. So again, starting out at age 16, I was fortunate enough that my dad, since he was a financial advisor, kind of used him. So again, I didn't have an app right away to start with. So again, that's one option, is to find a financial advisor. They kind of have a platform that you can use. They're nice because they're able to answer a bunch of questions for you. But kind of, I mean, going once I turned 18, tried out Robinhood, which I'm sure some of you may be familiar with. A great platform there. Lots of, I mean, very easy to understand, I think, for people that are just getting started. And there's a couple other platforms I've checked out, such as Acorns as well. That was another one that kind of gets your foot in the door. You don't have to do a ton of work to get going. So those were a couple of platforms that I started with. Mia, I'm kind of curious, which ones did you kind of start with when you were starting out at age 16?
Yeah. So over my investing lifespan, I've tried a variety of platforms, and some are easier than others in terms of the variety of investments that they offer. But ultimately, I would say all of them at the end of the day are pretty much the same, since, since Robinhood came out with zero commission trades, now all brokerages have followed. So there's no really differentiating factor they have besides their sleek, sophisticated interfaces. But what I would say is that some brokerages don't offer alternative investments or speculatives, not something that I personally am interested in, such as crypto or NFTs, but I am invested in farmland, real estate, and even e-REITs, which are real estate properties listed on the exchange, and sometimes real estate trusts as well. Personally, I stick with institutional brokerages for the longest time, and they range from Vanguard to Fidelity, Charles Schwab, but what I would say is one of the most important rules I've learned with managing money, regardless of where it is to never have your assets in one place. As you may have learned, if you've learned about the housing crisis in '08, one of the two most prominent banks were Bear Stearns and Lehman Brothers, and they were established billion-dollar bulge bracket banks, the size of the behemoths today, and they were betting against homeowners and didn't weigh risk appropriately, and they were unable to pay back their dues, and before they knew it, they went underwater, and their clients lost everything. So I think that, even though I was only 8 at the time, just having a good reputation is really important, and in the brokerage, and offering attractive investment vehicles, and also not having all your assets in one place. So regardless of where you place your funds, it's important to spread them out, just in case, who knows, even though an institutional brokerage firm like that, who would have thought that they would have gone under, and their clients lost all. So you have to be careful on that front.
Yeah, no, I think you bring up a good point there. I mean, especially nowadays, there's so many different platforms out there. I mean, 5 years ago, there's still a good amount out there, but now, I mean, the fintech space has just exploded in the last 5 years, last 2 years, even if you just look at that. I mean, there's so many options. I think what you said, Mia, is great. I mean, they're all pretty much do the same thing. So you just got to be careful. And I would agree. Yeah, definitely kind of don't put all your eggs in one basket. I think when you hear investing, it's like, okay, yeah, investing, you got to go into the stock market to invest. Like, okay, that's one basket you can put it in, but like, as you mentioned, real estate. I mean, there's so many different options that it's definitely beneficial to kind of diversify your portfolio, your holdings over time. Because again, just like she mentioned about the Bear Stearns, I mean, something like that to happen, you don't want your whole portfolio all going in there. So I think that's a great point you bring up, Mia, about kind of diversification there.
Thank you so much for both of your answers. Those are really insightful. So, can you move on to the next slide? Okay. The next question we would like to ask you is, did you take a personal finance course at any level of school? And if so, did that help you at all?
Yeah, I can start off. In high school, I went to a smaller high school. It was about a 100. Again, I don't know where you all are from, but it's about 150 in the graduating class. Maybe that's large to some of you. Maybe that's small to some of you. But with our high school, we didn't have any financial literacy courses at all. So I didn't have the option in high school to take anything. It wasn't until college that, again, majoring in finance and accounting, that I started to kind of take a couple classes, gain exposure to that. And I mean, definitely helped. I mean, there's so many different options there, whether it's the fintech space that Mia's kind of going into, whether you want to just do finance. I mean, there's so many different concentrations. Yeah, I would say it definitely did help for sure to answer that question. I wish we had some more options in high school to take those classes and learn it from a younger age. You turn 18, now you're an adult, you're going to college. Like, okay, I haven't even taken any personal finance classes at all. And now I'm supposed to know what to do. So that's kind of, I wish and I hope kind of down the line that high schools can start incorporating more or offering more electives for some financial literacy courses. But yes, they're definitely beneficial. Even if you're not majoring in finance or whatever, I would definitely recommend taking just an entry-level finance course just to gain a little bit of exposure, just to kind of understand what it is, how it works. It can be overwhelming if you have no idea, but that's definitely something I would recommend for sure.
Yeah, just going off of that. So as you may have known already, for those in high school, unfortunately, there's no nationwide FinLit financial literacy curriculum, and we can't depend on the institutionalized dated education system to provide us the learnings to propel our financial future, or keep us afloat anymore, as the cost of school is only rising 2-3-fold each year, even above inflation. And the first time ever, I read something the other day that student loan debt will surpass credit card debt, over $2 trillion. And as a personal finance advocate and blogger, I really stress the importance of making sure every student takes the time to tackle their financial future outside of school. Otherwise, unfortunately, you'll kind of be lost and in debt, which is the last thing you want to be in. And no one likes to talk about money, but it's part of our world and will stay with us forever. So the earlier you can start, the better, for sure. And especially in the markets, time is on your side, as I mentioned. And I didn't take any personal finance course at school since there were none. But I did do the standard econ class, that frankly the only class I enjoyed or did well in. I also took additional classes outside of school. I did an internship. I was big on that. That's really where the learning starts. As I mentioned, on the trading floor as well a bit. I couldn't call clients or anything, but I learned the ins and outs of the Bloomberg terminal and understood shadow banking and dark pool trading, which was helpful. But what I would stress the importance of is really actually investing yourself, because you'll learn the most from your losses. Wouldn't recommend losing money to simply learn, but it is the best teacher for sure.
Right, that's nice. Yeah, going off of that, what are some specific obstacles or barriers you had when you first started investing?
Yeah, I think part of it, my example I touched on at first, I didn't understand how a stock price changed. I was like, what? So you buy it and how does it go up? Why does it go down sometime? Why doesn't it always go up? So I think just understanding that logic was the biggest hurdle to get past. Besides that, I think it then goes to, okay, now what do I buy into? There's so many, tens of thousands of different companies on the exchange. Which ones are good? Which ones do I buy into? Which ones do I not get into? Options is another thing. Do I get into these options? Okay, that was one thing that, again, when I was younger, kind of right at 18, I'm like, yeah, I want to do options. I got into it, didn't know what I was doing exactly, and did lose some money, unfortunately. So I think that was definitely a big barrier. And like me, like you said, hopefully you don't have to lose money to learn a lesson. Now, when options I did, I'm like, okay, yep, I definitely don't know what I'm doing with options right away. So I think there's a lot of different options out there, not options, but even stocks, whatever to invest in. I think it's just, like you said, Mia, kind of taking the time to just invest yourself, just kind of take a little bit of time just to learn it, or seek out someone that does. There's so many people out there, even if it's just a mentor or another friend or an adult, whoever it may be, ask them, be like, hey, I'm curious, or find a financial advisor, whatever it may be. But I think those are a couple of the obstacles I had. I'm curious, Mia, any obstacles you had right away?
Oh, a ton. What's certain is uncertainty. That's the common phrase I like to always reiterate in my mind. And there will for sure be obstacles. It's just part of this game, and you have to get used to it. The markets are unpredictable, and if you're watching what's happening now, it's extremely frothy and speculative. And what I find fascinating about this field is that regardless of your prior experience, whether you have an MD or PhD, you name it, in day trading to technical analysis, that goes out the window because you're only as good as your last trade, and past returns don't guarantee future results. So I would definitely stay modest and humble, prudent, and just focus on the fundamentals. Don't believe that you can beat the market or the Fed for that matter as well. And don't confuse brains with a bull market, as they say. And I had taken on too much leverage at once, starting out. Even now, a few Chinese companies got delisted the other day, Didi, and the Chinese regulatory concerns, and I lost some money. Thankfully, I just took out my invested capital with interest and went away. But that just investing in Asian equities or in international markets are risky as well. And I can't name specific stocks off the top of my head because I've made too many mistakes. But I would just also focus on passive investing in order to minimize those losses as well, since it historically beats out active investing instead of individually stock picking and trying to place bets on the market.
Yeah. And I think going off of that point, I think another big obstacle that we've seen in the last year or two, even just the last year, I think with the pandemic, is kind of those meme stocks that you see, whether it's GameStop or AMC or whatever. And really, there's no reason why a stock price like that should be going up. Besides the fact that all these people on Reddit or whatever decided, hey, let's see what we can do. Let's try to inflate this price as much as we can. And I think the obstacle there is, hey, look at the stock keeps going up. I want to buy in. I want to get in on this. There's really no reason exactly on why it is, besides kind of the volume and the options, kind of the derivatives behind that. So I think as an investor, it's hard to I want to get in on that one. Really, there's no fundamental reason why you should, but also part of it is you're like, well, I don't want to miss out on these returns. Well, I know a handful of people that thought that was the right way to go. They bought in at the highs, and obviously, of course, it comes back down and lost a lot of money. So I think that's part of it. Is what we've seen now is it's almost like a social, hey, yeah, everyone's doing it. I want to jump on this bandwagon, get in on this company, even though I don't know why, or it doesn't make sense why it's going up. So I think that's part of it. And I would also say, kind of trying to resist the urge, especially when, like we've seen in the markets now, it's kind of been down a little bit, resisting the urge to want to sell out of everything and go to cash. I think the big key that I've kind of always had is the kind of long-term. If you're, for some of your holdings, at least, kind of keeping them long-term, if you're selling out of cash every time it dips, by the time you buy back in, you might end up having to buy back in at a higher price. Now you just missed out on that return there. So I think that was definitely a big personal obstacle I had. I'm like, oh, it's going down, I want to sell out. Well, I did that a couple times where I sold out and bought into the same company or companies later on, but I actually had bought in at a higher price because, again, had I not sold out, it would have gone back up the next couple of days. So I think those are a couple other obstacles that came to mind as well.
Yeah, thank you so much for those answers. Okay, so the next question that we would like to ask you is, what steps were necessary for learning how to invest? Some of the questions that the people on the Google form asked were, did you have to watch a video or read a book or anything like that?
This is a continuous process, so it doesn't just start with one book and end, but no doubt just becoming exposed to a variety of sources, outside of also the most conventional ones, I would say Wall Street Journal or Financial Times. You can gain a really good understanding outside of those as well. So don't just stick to those. And you don't have to be a math or stat nerd to actually be interested in the markets. I would stress the importance of understanding the framework of the companies that you want to invest in. And even if you're a consumer of them, see what you like about them and if you really want to invest in their future. Also digging into just conceptual fundamental sources can give you a good framework as well. Personally, I strive to read roughly 2 to 3 hours per day on the economy and markets, but not on specific stocks or what media moguls tout. Rather just to enhance my understanding and curiosity in the market, since I'm genuinely interested. And also partly because I'm a personal finance blogger, so my most common sources have to be diverse. And I read a variety of sources that I'm kind of addicted to at this point, since I read them daily. on a daily basis. A few that come to mind are CNBC Make It. They have a great section for millennials, but also Gen Zers. I'm subscribed to Bloomberg's columns. Matt Levine, he's a great author. A little maybe intense on the technical side, but it gives you a great overview. Briefings by Goldman Sachs, they have a great newsletter. Morning Brew, they have a really nice website, and also on the podcast side, I'm a big podcaster as I just walk the streets in New York with my headphones on. Professor Galloway, he's a NYU professor. I got the privilege to be a student, and he's magnificent. You can even search him online and Scott Galloway, and he's terrific. And also The Balance, it's a great website. But ultimately, as I mentioned, the best way to learn is to make mistakes. We have loss aversion as investors, which means we weigh our losses more heavily than our gains and tend to remember them more, which is good. Our losses teach us more than any other textbook can provide. I don't think I've ever read a textbook on investing, nor need to, because the world is rapidly changing and textbooks are just not applicable in this environment. So I would definitely stick with also the classic books if you can. Rich Dad, Poor Dad, Intelligent Investor are great reads. But most importantly, what the best information is online.
Absolutely. Yeah, I think you hit the nail on the head there, Mia, with everything you said. So I'll add on a little bit, but I think the biggest thing is, yeah, it's not that it has to be, I mean, you think investing, all these numbers, it's not that you have to understand the technical analysis behind everything there. I think it's more kind of understanding the broader spectrum, as Mia kind of talked about, understanding the economy as a whole, and maybe focusing on, I mean, some articles from CNBC or Wall Street Journal. Those are a couple that I read as well. And same thing, I can't think of it really any textbook that I've used. There's nothing really there. It's more kind of some of those books, Intelligent Investor, as Mia mentioned, A Random Walk Down Wall Street, a couple different books there that I would definitely kind of dive into and read there. It kind of helps give you the kind of terms and concepts that can be expanded across multiple years. It's not like, this book's 5 years old, it's not relevant anymore. It's kind of the broader spectrum of, hey, what's the economy? What is investing? Why is it important to invest on kind of a long-term basis and hold those investments? So I think that some of those books, I mean, taught me more than anything, sometimes more than certain classes, honestly. So that's where I would take it into your own hands and also kind of focus on what you want to learn. There's so much out there. You don't have to understand all of it to become an investor. Like Mia said, I'm still constantly learning. Mia's still constantly learning. I mean, it's an everyday thing. Like, oh, hey, yep, what else am I reading? New article or a new book or whatever it may be, constantly learning to kind of try and be a better expert in this field. So I think that's part of it. And even, I mean, when it comes to potentially picking stocks, I think part of it is understanding the fundamentals in terms of earnings and how the company is doing holistically, but also kind of taking into approach as if you're a consumer, hey, what do you like about the brand? What do other people like about it? Do you think that's going to be something that's going to continue or not? For example, I mean, over COVID, one of the examples I had is I went to Best Buy. I was looking for like a new webcam that I needed for my computer. I was looking around, pretty picked over because of COVID, the pandemic. Everyone was kind of virtual. They had no webcam. So I was talked to an associate. I'm like, hey, do you have any more in the back by chance? He's like, good luck, dude. Like, you can try like Logitech's website, but other than that, they're pretty sold out. I'm like, oh my gosh, like, duh, like that makes sense. So they're sold out the pandemic. So what did I do? I went home, did a little bit of research, ended up buying into the Logitech stock. And again, lots of stocks had kind of seen a dip in during the pandemic. But again, after that, with all of their kind of sales and that, I mean, skyrocketed after that as well. So I think it's part of, I mean, understand the broad picture, but also kind of taking the opposite approach. It's not always all fundamentals. It's a strong indicator as well, but as a consumer, I think taking that approach is a part of what we've seen with the investing world, especially recently.
You're very, very cool. Yeah. So you guys mentioned a lot about like reading books to gain a general understanding, a lot of trial and error and like observations with the market and stuff. So how long does it take to like truly understand and become comfortable with investing? Like how much experience or?
I'm sure, Trent, you have a similar sentiment to this, but I would never stay complacent in the markets and believing that you're so comfortable and a genius that you can beat out the markets is, I believe, a dangerous belief. And I would make sure you have your ego in check and always have a larger portion of your portfolio passively invested. If that's what you mean by being comfortable. It's almost impossible to beat out the markets consistently. So I would never conflate skills with a bull market, especially for our generation who's never witnessed a bear market as investors. It's very easy to get complacent and take on excess risk when you believe you're doing well, but in reality, it's not based on your skills and expertise per se all the time. It's based on pumped up stimulus and liquidity into the markets and just the unpredictability of them. And almost, especially now, almost all asset classes are up, and it isn't always due to technical analysis expertise. It's just due to luck and what's going on. So I would never become too comfortable, because then you might do poorly.
Yeah, no, I would echo everything there. I think the biggest thing is keeping your ego in check. I mean, it's easy that, hey, once you pick a couple good wins, you're like, oh, look at this, look how much I made. I did really good and picked a couple good stocks. And the minute you start like, yeah, I know what I'm doing, that's the minute where you're going to start making some of those wrong decisions. Or like Mia said, I mean, and beating the market is nearly impossible, if not impossible. It's luck of the draw. I mean, for the most part of it. So I think that's a big thing. I mean, just echoing on everything Mia said. I mean, feeling comfortable enough where you're like, hey, yep, I can get started. That's one thing, but never getting to the point like, yep, I'm a pro. I know exactly what I'm doing. This is easy now. I know everything. If you ever get to that point, try to check yourself and check back to normal without that ego there, because that's where it can become dangerous there. So.
Yeah, I agree. It's always very important to keep your ego in check, just in general, like never get too ahead of yourself. So next, we want to ask, what changes have you made to your investing strategy or portfolio?
Yeah, so I read something the other day that stated only 25% of companies listed this past year were profitable, and compared to the 1980s, over 80% of them. And I think this is just an indicator on how hot and speculative and frothy the markets are. And I think this is definitely changing my outlook on the markets, just reading reports from strategists and understanding, although usually forecasts aren't that accurate, to be honest. Just understanding that 2022 might be harder to predict and that markets may be flat. Just looking at last week on Black Friday, it was completely unpredictable. You know, COVID is still around, and it'll probably be with us forever. And what's certain is uncertainty. That's just how the markets go. So I'm a little wary, but all investors are, and I need to determine how I'm going to evaluate these companies, since there's just so much froth in the markets, and it's hard to differentiate where your skills play in with your investment decisions, since everything is at all-time highs besides what we saw last week. So I would stick with, in terms of the changes, companies that you've heard of always, possibly use and just have faith in. It's not something so crazy. It's usually simple, and with the investment world and with shareholders, they're betting on the future and the vision of the CEO, and you should be too. And just on a high level, and investing is for your future, and the market will provide you really three income sources if you're diligent. Interest from fixed income products, the largest asset class, alpha generated from your returns you receive, and diversification returns. And there are a variety of asset classes that have rose to prominence in the last year and a half due to pent up demand, pumped up Fed stimulus. But it's important to understand when to rebalance and when not to. It's not recommended to do so that often, and just keeping a stable outlook for the long term, I think is always key, because there's always going to be volatility short term, but long term, just keep your horizon for the long term to be best afloat, just mentally as well.
Yeah, nope, I agree. I think especially with the pandemic, a lot of us kind of saw that. I mean, even where we're at now, like you said, Black Friday, and it's kind of going back down. We'll see kind of what this shapes up to be. And I agree. I think 2022 is going to be different for sure. It's going to be hard to, I mean, every year is hard to predict. You think it might do really well, and there's other factors you're not even aware of, and it might go the opposite way. So I think the biggest thing that mine shifted, I would say, over the past couple of years would be kind of diversifying into more of those different asset classes. I think initially when I started, it was just kind of stocks that I was in, just kind of some of those IPO stocks I was in right away. I had a lot of interest in those. Not the best way to go right away, but I think, like Mia said, there's a bunch of different income sources, whether it's dividend, whether it's interest. I think kind of spreading those out is definitely kind of the key, as well. I mean, maintaining your kind of holding your positions for kind of long term. As Mia mentioned, you don't want to have to rebalance all that often. Now there are certain scenarios or factors that come up. You're like, yep, I gotta kind of shift things around. That's different. But I think trying to kind of stay in that mindset of wanting to hold kind of longer term for a majority of your assets is kind of key. And that, again, that's where mine changed again from starting out as a young investor, kind of looking in the short term, like, yeah, but I just want to make a couple trades here and there. I think my strategy is kind of maintain kind of more long term, look into the future. As well as kind of diversifying into real estate. That's been one that I've gotten into more recently, last couple of years for sure. I think, again, there's so many different asset classes there. I think just keeping your options open is kind of the key, keeping your options open and long term, the long horizon. I think that if you can keep that in check, I think you'll be set for the future for sure.
Awesome. Thank you for both of your answers. And the next question is, what activities can we do inside or outside of school to help prepare us for entrepreneurship right now, like as students?
Yeah, I think that's a great question. So many different options. I mean, I'll touch on a few, and I'm sure I'll just scratch the surface, and I'm sure Mia has a bunch of different ideas as well. But I think just try to grow your network. I know it sounds a lot maybe in high school to start networking, but just reach out to people. It doesn't have to be anything. It can be super professional if you want. There's a lot of exposure you can gain from LinkedIn. If you're not on LinkedIn, start that. I mean, there's so many individuals out there that on LinkedIn, and a lot of people, if you reach out, especially as a high school student, so many people are willing to give back and share their experience or whatever questions it is you have for them. So I would definitely encourage doing that. There's been a handful of people that have reached out to me from high school. I'm like, I love that. I'm like, you're on top of your stuff. You want to just learn. And I'm like, I am more than willing to take 30 minutes out of my day, whatever it may be, to give you resources, to answer questions you have or whatever it may be. So I would just say, just kind of grow your network. And it doesn't have to be just through LinkedIn. It can be through friends. It can be through teachers. I would say get to know your professors or teachers at high school really well and just kind of ask them what they do. I mean, obviously they teach, but they probably have stuff they do outside of work, and maybe those connections will lead to other connections. I mean, parents, friends, whatever it may be. So I think that's one thing, is just keep your options open there. In terms of, I mean, more entrepreneurship, if there's something you're passionate about, go for it. I mean, try it out. There's no, I mean, take a risk. I think that's the biggest thing I didn't do right away. In high school, I ended up starting up a small school apparel store. Before that, I was thinking, like, I didn't know what I wanted to do. I mean, in high school, I think it's hard to know, hey, when I go to college, what am I going to focus on? It's a lot to make up your mind at age 17, 18 to figure out where am I going to go. I was thinking kind of science engineering because I didn't know what I wanted to do. People told me, hey, you're really smart at science engineering, you should go that route. I'm like, okay. Kind of talking to a teacher, whatever. We noticed that, like, our school, since it was smaller, we didn't have a school apparel store. I'm like, oh, okay, that's kind of interesting. I'm like, well, that'd be kind of cool just to maybe start one up and see what I could do with that. So kind of over the summer before my senior year, kind of built out a plan, ordered some apparel, started up a school apparel store for our school. And that's what really opened my eyes to business. And I mean, again, taking that risk, I didn't know exactly what I was doing, kind of jumping into unknown territory, uncharted waters. That kind of opened my eyes to business and entrepreneurship in general. So I think sometimes, to really grow in that entrepreneurship side of things, you got to get yourself out of your comfort zone. There's kind of two ways that I kind of think of it. You have your comfort zone, and outside of that, you have your growth zone. And there's not a ton of growth within the comfort zone, but the minute you kind of step out of that comfort zone, that's when you can start to grow, whether it's entrepreneurship or anything. So those are a couple points I have for sure.
Yeah, definitely becoming comfortable with the uncomfortable is huge. And I always, like, every morning, I just tell myself, like, to regret. That's it. Because the best time to take a risk is when you're younger, because you have less responsibilities, more time on your hand, and you don't have a full-time job that you have to keep afloat. So, but I would also emphasize starting to get out of the classroom. That's really where the learning begins. And over the years, I've scaled, brought on some people to help me with my company, reinvented myself a bit, and eventually sold my company. And I learned far more during that process than I could have ever during college. And this is not to say that a degree is worthless. It certainly isn't. And that's why I'm going to NYU. And a degree will never go out of style. A degree is an economic premium that cannot be replaced, and just offers security and stability and a plethora of other benefits to propel your career, from networking to theoretical thinking. But on a high level, to be an entrepreneur, you have to be in the people business, and I don't find that's something the education system prioritizes, along with mental health, financial flexibility, and freedom, and a lot of other topics that I'm sure you all have found. And instead of memorizing information that goes in one ear out the other, we need to focus on group-based projects, learn how to listen more, hone and decode your people skills, body language, and ultimately making others feel good, I think have really helped me understand how to work with people, how to pitch, how to negotiate. And these activities all involve tinkering, creating, in a maker space or in a playground for creativity, where you don't care to fail. You actually succeed at failing. You ask questions, you make mistakes. And I was fortunate enough to be able to go through this at the Entrepreneurship Lab at NYU and on my own at home, and just build that network. And I make it a priority to keep in touch with people every day. As Trent alluded to, networking is everything. And you don't want to start networking when you need to. You want to start networking because you should. And a network is an insurance policy that money cannot buy. And it's so crucial. And it'll help you far more than maybe a degree. And ultimately, just to wrap up this question, I would say what you put in is what you get out. So even if you go to school and do your coursework and get that degree, that doesn't guarantee a successful career. And success is defined by you. But with entrepreneurship, it's the same deal. It's all in your hands, and you want to make sure what you put in is what you get out from it.
Okay. Yeah, so Glennis, I saw that you have a question, but just hopefully like you can hold on to it for these next two questions, and then we'll move on to the audience like Q&A section. So if you want, you can just type it in the chat to me or Daniel, and then you can like either read it out yourself or we can read it out for you. Depends on what your preference is. But our next question that we have prepared from the Google form questions is, what's one thing you wish you knew about investing that would have helped you?
Well, there are quite a lot, and I'm learning every day. I would say, as hard as this is to internalize, especially the younger you are, it's to stay patient. And I think one of the biggest regrets people have is that they weren't patient enough when they were younger. Things don't work out overnight. It takes a long time, and especially in the markets. And also to stay simple. Simpler the better usually. When you look at legendary investors, Peter Lynch, George Soros, Warren Buffett, they always believe in a foolproof way, an easy way to invest that makes sense. And that's typically through a diversified index fund that just tracks a broader market. I would always advise just low cost ETFs, index funds. That's maybe something that I wish I got into earlier than wasting my time trying to price movements and chart stocks through technical analysis. And also just staying patient and simple is best. And also, just as I mentioned earlier, never to believe that you're smarter than the market. Be vigilant about what Musk touts and crypto leaders and what these tweets say, because they can be misleading. I find that on Wall Street, everybody believes they know more than they should. So taming your ego, looking out at a larger perspective, and asking yourself, why am I actually investing in this? Because this is to grow your money and fund your lifestyle over time.
Yeah, Nope, I think you you stole a couple of the ones I was going to talk on anyways, but I'll reiterate them. I mean, the biggest one that I think I've talked on a couple times now is just the long term. As Mia said, be patient. It's not something that's going to happen overnight. And if you want it to, it's you want to try and hold those returns as long as you can. And I think that's the biggest thing is be patient in the market, and know that there's a lot that you don't know. Now, that doesn't mean, that's not to say that you have to know everything in order to start investing, but I think having the mindset of constantly learning something new, I think is key for sure. Again, as Mia and I talked on, this is something we're still doing every day, whether it's an article we're reading, a book we're reading, a podcast we're listening to from other people that are maybe older than us that have more experience from what they've seen, what they've learned. It's constantly in that mindset of, hey, I don't know everything. I'm going to learn more if I want. But also, I mean, not to the point where you have to get so complex or you have to know every single facet. You'll never be able to understand every single facet of the industry. I mean, it's way too large to understand that. No one is at that point where they understand everything. So I think, yeah, keeping it long term, be patient. It will work out in the end, as we've seen over the past decades. I mean, it continues to work out, continues to go up. So just be patient, trust the process, I guess I'd say. And yeah, just know that you don't know everything, and there's a ton to learn out there.
Yeah. Well, thank you for sharing your answer on that. Yeah, being patient, just willing to learn as you go is a huge part of that. And so next question, advice for high school students who are interested in investing, and it kind of ties into our last two questions.
Yeah, I would say, I mean, if you're interested in starting now, talk to your parents. There's a couple different ways you can get started. Most investment accounts, you have to be age 18 to kind of start. But if you're under age 18, you can still open up a custodial or a minor account as well, which is kind of tied to your parents' name until you reach a certain age, and then kind of transfers to your name. So if that's something you're interested in, talk to your parents. Your parents, if they have a financial advisor, most financial advisors are able to open up those custodial accounts for you, and kind of get your foot in the door. So that's what I would say. I mean, talk with them. I mean, talk with others as well. Reach out to Mia and myself. Happy to answer more questions you have. I mean, following this conference, if something comes up, just ask a lot of questions. And I mean, yeah, that's kind of where I would start. Mia, what are you thinking?
Yeah, I would agree with that, definitely. And whether you're a teen or a tween or an adult, whatever it's called, it's never too late, and it's better to consistently invest and contribute through dollar cost averaging, which is consistently compounding, than just dump a lump sum and expect it to grow overnight. And investing means that you're having your money work for you, not against you. And you or your parents can set up a Roth IRA, that's a post-tax account, as soon as you are born. Although it requires earned income, they can still donate a gift to you each year of $15,000. So that's already a kickstart. And along with a 529C for college, a fund for that. Those are great ways to just get started. But besides buying a home, education is the most costly decision an average family will make in their lifetime for their child. And I can't even imagine the price of college in 5 to 10 years time, when the cost of tuition rises exponentially, 2-3-fold each year, through a step-up basis. And these plans are made for long-term growth. You're unable to withdraw from your Roth IRA until you're 59 and a half, because it's made for retirement, to fund for those purposes, because retirement is the most expensive and arguably scary moment of your life. And you want to make sure that your money works for you to grow and provide you a down payment for a home in the future, or pay for living, whatever you need your fund to afford you. And also just to stress the importance of having cash on side. I think a lot of young investors believe that they'll never lose their job, that there's never going to be a recession or an emergency. But unfortunately, that doesn't happen. And I would recommend, and the universal recommendation is to always keep 20% of your portfolio in cash. Conservatism doesn't mean that you'll get lower returns. It means that you'll be safer in the end. And having a diversified portfolio, regardless if you're 12 or 16 years old, with a variety of investments from equities to fixed income, alternatives to real estate, farmland, crypto, artwork. There's so many options, and I don't want this to be overwhelming because it's your life and you get to choose. But just telling you that there are a lot of options to fund your lifestyle. And when you're young, you can afford to take more risk as well than your parents, since they have a shorter time horizon and can't recoup the losses that come with investing. So I would make sure to always prioritize cash and diversification.
Yeah. And one thing, I mean, I would say on top of that is, I mean, again, with everything we've talked about today, you may be like, wow, this is a lot. This is overwhelming. Just, I mean, you don't have to understand all that to get into investing. If you want to do it on your own, sure. But also, I mean, if you're like, hey, I want to invest, I see the importance behind it, but I don't know if I want to learn all this. I don't have the time to learn all of this right away. That's why there's other people out there. So there's experts in this field that you can reach out to. They can kind of help you get started. Don't feel like you have to know anything about everything before you get started. There's other people like a financial advisor or someone else out there that can really kind of help you. And again, if you want to take that over kind of down the road, you're like, yep, now I really want to manage my own portfolio directly, you can do that. But at least to kind of get your foot in the door, sometimes that's a good option, because I mean, again, that's a free resource kind of to you, financial advisor or something as well. So
Okay, that about wraps it up. So now we're going to move on to the additional comments, questions, and concerns that any audience members may have for any of the speakers today. So I know that Glennis had one.
Yeah, so for question 8, Mia, you were talking about networking. What exactly is that?
Yeah, great question. I didn't even know what that term meant a few years ago. So it simply means getting to know other people and leveraging your connections, people in the industry, in a variety of other spaces to help leverage your career. And people are so important to getting a job. When I think back to the jobs, especially when I was younger, the only way I got those jobs was through cold calling, keeping in touch with my connections, and really prioritizing them in my schedule, because I couldn't go down the ghosting route of just putting my resume CV through a robotic system and waiting for a reply. I would have gotten no response or pass that way. It was only through people. So it's really crucial to do that. And I mentioned that networking is an insurance policy that money cannot buy. What that means is that nobody's going to connect with you if you give them unlimited amounts of money. They want to connect with you because they want to receive something on their end. And also, obviously, you want to receive something on your end. And that's usually a referral, just a friendship, which I would really prioritize first, and never ask them for anything. The best gift is giving, and never asking for something in return. And networking is like a job. It's continuous. You shouldn't start it when you're looking for a new position. You should start it when you start your career, which is now, because it's so important. People will help you along the way, and without it, you can get lost, and really you can be down on yourself because you don't have anyone to support you. And Trent and I are colleagues, and we're networks. We met through a nonprofit, Scholars of Finance, I believe, Trent, and we've just grown our connection from there. And so it's so crucial to prioritize at your age. And you may be asking, where do I find these professionals? LinkedIn, go to coffee chats at your school, go to various events that your school offers, all these possibilities. And if you're really eager to get to know someone, they can sense it. And make sure that it's genuine, that you're just not asking for something right away, because then they don't want to hang out with you. I hope that helps.
yeah, and one thing I'll just add on, don't be afraid to put yourself out there. I think it can seem very scary at first, like, oh gosh, I don't want to send a message because what if, especially as a high school student, a young professional, people are so eager to help you out and support you as well. So yes, don't be afraid to put yourself out there.
Okay. Does anyone else have any other questions, comments, or concerns? Okay, with that, we can move on to just wrapping up. It's exactly 4 o'clock right now, so we're sorry if we hold you like a minute or two after. Okay, So you can get involved with InnovateX by emailing any questions or ideas to team@innovate.x.org and by supporting our initiatives by using the link bit.ly/join InnovateX. You can just type that in and it'll take you to the longer URL, which is really cool.
Yeah, in addition, you could also apply to become a state director or open up a chapter at your school. And you can apply to start a chapter on our website at innovatex.org.
Oh, I have a question.
Yeah,
Oh,
sure, go ahead.
If I was interested in starting a chapter at my school, how would you recommend going about that?
Okay, so on the InnovateX website, okay, wait, Daniel, I don't know if like I can share my screen, but I'll just like narrate it. So I'm on the website right now, and there's a tab called Get Involved, and then there's another tab called Start a Chapter. So I'll put the link in the chat. Okay, I just sent it to a direct message. Whoops. Okay, so I put the link for starting a chapter in the chat. And if you click on chapter registration, which is at the top, takes you to a Google form, and then you just fill that out. And then the team will reach out back to you a few like weeks, I assume, like after you submit it. And yeah, or you can just email like anyone with the contact info that we give you on the next slide.
Awesome. Thank you so much.
Yeah, and Joseph, here's the next slide, so you could go ahead and take a screenshot if you like.
Yeah, so feel free to screenshot this. Here's our website, email, Instagram, and both of our panelists. And we highly encourage you to get involved.
Yeah, and that brings us to the end of the webinar. And thank you so much for coming. And thank you so much to both of our panelists, Mia and Trent, for coming out today and sharing your investing experiences with us. And additionally, a huge thank you for all our participants for taking the time to attend this event.
Cool. Thank you, Daniel, Catherine.
Thank you.
Thank you guys.
Thank you so much.
Thank you.
Thank you so much.
Thank you.